everyone, Matthew from therighttrader.com back again with another video. Today we're going to be doing an analysis on Coca-Cola stock with the stock ticker KO, and it is currently sitting at $45.60. It's got a market cap of just under $200 billion and a nice little dividend of 3.57%. So it is obviously known as, one of the most classic and basic stocks out there. I know that this was the first stock that I personally ever bought. I don't own any shares of Coca-Cola right now, but I am considering it since it is obviously a very long-standing company and it has been proven to been, around forever and also been able to hold up through tougher times because it's such a consumer staple that people don't really stop buying Coca-Cola. So it has a lot of fundamental advantages right there. And we're going to look at the chart here in just a second. But obviously, I don't think I need to pass too much time speaking about the fundamentals because they are so strong. So if we head over to a basic chart here, you're going to see a couple things. First off, looking at the last 5 years of Coca-Cola, you can see that it's been very stable, even moving higher. But if we zoom out a bit, you're going to get a better, bigger picture view of what's been going on, which is obviously a massive uptrend, right? One of the best performing stocks of all time. However, one thing that I wanted to point out, which is really one of my only concerns with Coca-Cola stock, is the fact that it did have in its history something that maybe some people don't realize is an extended downtrend that lasted several years, right? The downtrend began in 1998 and ended around 2005. So it had a very drawn out downtrend, and obviously after that, we've been on an uptrend ever since. But just the fact that it can go down for some time like this is a little bit of concern, and it's something I don't want to see happen again as we move forward into the future, right? So that is something that I did want to point out, and something that I think you do need to be cautious of. Not that that's necessarily going to happen, because like I said, we have been in a very, very nice extended uptrend, right? But there is always that possibility, as it's been proven in the past, and I wanted to directly compare this with Pepsi stock. Not that I think one is particularly better than the other. I'm not sure if Pepsi is maybe a bit better diversified in some ways than Coca-Cola, but it doesn't have in its history any type of extended downtrends, right? It actually just has a very steady uptrend with some pretty small dips here and there. So that is something to keep in mind, right? That Coca-Cola is not completely untouchable and has had some ups and downs, especially this long-term downtrend over here that lasted several years. So not saying that that's going to happen again. Obviously, if we look at the more recent signs, it would point towards that not happening. I think history does repeat itself, and that's something to just be aware of. Now, I'm not specifically sure what caused this downtrend back in 2000. Whatever it was, it was pretty rough, right? Now, let's go ahead and take a look at the more detailed chart here of Coca-Cola. So over here, we're on the long-term view. I'm going to go ahead and zoom in here in just a second. We'll return to the long-term view in a bit, but I just wanted to cover already in the shorter term kind of what's been going on with Coca-Cola stock. So what you're going to see is that it did get pretty strongly oversold. In fact, right over here, you're going to get to see that we just a few weeks ago, we dipped below the Bollinger Band line, the lower Bollinger Band line, and we've since recovered very nicely from that. If I move over to the weekly time frame, which means that every one of these candlesticks is a week's time, you can see that we very nicely bounced above the 30 line on the RSI, so that's bullish. We are now putting in a bit of an uptrend, hopefully, on that, although we do still have our downtrend line that is continuing. So it's a little bit of a symmetrical triangle scenario that we're dealing with right now, so we'll have to see how this plays out exactly. But on the MACD, we're still waiting for it to recover a bit more. We got the histogram coming back up. We still want to see this MACD flatten out and then move above the orange line. So as far as the price is concerned, right, we're currently right below the 200-day moving average on this weekly time frame, which is somewhat bearish. I do need to point that out. If we move over to the daily time frame, what you're going to see in the more shorter term is just a lot of consolidation, because the Bollinger Bands actually started to close in on themselves, right? And you've probably heard me talk about this in the past, but when the Bollinger Bands tighten up like this and start becoming very close to the actual price, it usually just creates up and down consolidation for quite some time, right? As we head into the future. So that is definitely something that could happen based on what I'm seeing in the shorter term. And also, based on our little symmetrical triangle formation that we have over here. So that is absolutely something to keep in mind. So let's go back to the longer term time frame. Now that you can see a long-term performance of the Coca-Cola shares, we're going to look at one of the key things that I want to see to be able to make an investment in the stock itself, because what I want to see is at least stability, right? I'm not looking for Coca-Cola to make new all-time highs. I'm not looking to even increase that much, but I do at least need some stability to warrant investing in it, right? Because it does pay a nice dividend, so that stability, if it can be there, would be enough for me to consider buying shares of Coca-Cola. And the first thing that I wanted to point out is that we are still fully holding our long-term uptrend line. So that is a very key bullish thing, and that is our main support that we really don't want to move below, and it's very unlikely that we do. Keep in mind, we also did bounce right off this red line, more or less. We basically tested that 200-day moving average area and bounced from there, which makes complete sense. Another support level that I should point out, a bit of a support and resistance level, is the area right around $44 to $45. We're currently right above $45. We could dip below that, so we'll have to see in the next few days to weeks how we're able to hold up around this level, but that's something I'm going to talk about. One option here is that we just remain relatively flat and consolidate right around $45. This isn't a bad scenario to be in, because we would keep getting the dividend during all this time, and yeah, it would just basically mean stability, keep getting that dividend, not necessarily a bad thing considering Coca-Cola stock. However, I did want to point out a couple bearish signs, is that we did lose our shorter term uptrend line support, and this was still a multi-year uptrend line that we now moved below. So we could get back above it. If we do, that would be extremely bullish, and we would probably just continue moving higher, making new all-times, in the next few months to years. But that is somewhat unlikely, right? It is possible, but just not very likely, considering that we now fully lost this support of this previous uptrend line, and it's more likely that we either stay flat and consolidate like I just talked about, or the next scenario, and one that is quite likely, is that we dip below the $45 support level and that we start moving lower again. Now, we do have very nice support around $30 to $33, $33 being a key support level in the past, and that is an extra layer of support. So I'm not too worried about the stock, coming crashing down to $20 or so. That just seems very unlikely, barring a complete disaster. It is much more likely that we end up, maybe pulling back a bit, reaching $35 or even $33, but bouncing off those levels, bouncing off the uptrend line, and continuing our move higher. In fact, this is what it should look like. I'm just going to draw a little sketch here of kind of what to expect in a situation like that, but we would drop, and then we would get a bounce, and then continue moving higher in this wedge, eventually break back above $45, and move higher from there. So that is the general idea, and I think that is pretty likely. Obviously, I drew out a pretty extended version of this. This could happen pretty quickly, right? If we get a very quick drop, we could bounce pretty quickly as well back towards that $45 level. So it doesn't have to be as long as I drew it out here, lasting years and years and years. But the general idea here is that we are going to see some type of slowdown or pullback for Coca-Cola stock. But I think that's not necessarily a bad thing, because one, you keep getting that dividend during that time, and two, even in the past, right, even during this previous downtrend over here, yes, it was downtrending, but guess what? You were able to get a bunch of shares of Coca-Cola at these discounted prices, and then you could have benefited from this whole increase over there, and that's a pattern that could very well repeat itself, hopefully not as an extended of a downtrend as back here. Follow on that. Also, check out my technical analysis master course. This is the ultimate guide to technical analysis for stock trading and cryptocurrency trading, guarantee, so you can try it 100% risk-free. We've gotten great reviews, 4.6 stars out of 5, over 60. You'll give it a try as well, and it covers candlesticks. Yeah, make sure to check it out. Link in the description. Thank you so much for watching, everyone. Stay safe, and I'll see you next time.